Good day, guys. Welcome to another lovely video session from the On Point FX team, a group of professional traders who have years of experience in the forex trading. So, if you need any help or assistance, just contact us through WhatsApp. That'll be the number. And don't forget to subscribe, like, and comment. Okay, and follow our broker also, xnet.com, with the link down there to register and start. So today we're going to look at what candlesticks are. You have to master what the candlesticks in the on a forex platform so that you'll be able to cash out a lot of money. So let's start with what a candlestick is. So as you can see, well, as you can see, um, we have two bars over here, one with the color white and the other with the color black. Now, the white one here represents the buyers, okay, and the black one here represents the sellers, okay. Now, with it depends on the type of color you want, okay, because on other platforms you could have the green to be for the buyers and the red to be for the sellers. So you could notice that anytime a candle is buying, okay, it opens from beneath, okay, and closes at the top. And also, anytime a candle is selling, you open it opens from the top and it closes below. Okay, so the thin lines you see over here are called shadows. Okay, the thin lines you see over here are called shadows. The shadows represents the the pressure at which the buyers and sellers are having in the market. It's a form of, let's say, it's a form of fight. So let's move on. Now we have something called the long or short candle. Okay, we have something called the long or short candle. Now with this long or short candle, okay, if you look at the small white uh bar over here, this represents uh the market. Okay, market isn't that volatile. Now if you look at this long position over here, you can realize that the buyers are in the market. They've taken control of the market. Now if you look at the other side, we have the black candle, and the black candle, we have the short one and we have the big one. So the short one, it represents that the sellers are few in the market. But with the long one, it represents the sellers are many and they've taken control of the market. So now the question is, how do you go about these candles? Okay, how do you go about these candles? Now, aside before we move on, we also have the shadows, as I said earlier on. We have shadows. Okay, so we have the long upper shadow here, which represents that the buyers took over the market, but the sellers came in to take control. So you can notice that the buy candle started from the open position was here. This was where the open position was over here, and it closed at a point over here. But here is the case: the sellers came and brought the um market position all the way down here. So you can notice that the sellers took control of the market. On the other side, you can realize that we have I'm coming, sorry. Let me clean this place. Okay, good. So on the other side, if you realize that we have a long lower shadow, a long lower shadow over here, a long lower shadow. Now with this, you can realize that the market opened at this position over here and it sold all the way down over here. Now if you realize that when the buyer stepped in, they brought all the position from the from below here to the top over here. So this represents a long shadow. So you could either have a long upper lower shadow or a long lower shadow. Then let's move on to the bearish engulfing bar. The bearish engulfing bar. So if you hear the word bearish, you should know that the sellers are in the market. You should know the sellers are in the market. And with this position, okay, with this position, the buyers take control of the market, but don't have full control of it when the sellers set in. Because when the sellers set in, they take control of the market and they bring the position of the um, forex platform all the way down. Okay, all the way down. So we have our opening price here and we have the closing price over here. This is called the bearish engulfing. You have a buy candle, a little buy candle, and a long sell candle on the right. Then this is a very similar candle of bearish engulfing bar. So you can realize that from the top here, from below here, you can realize that from below here, buyers were in the market. They took full control of the market. But when I got to this position here, the bearish engulfing bar took place. Okay, so you realize that the buyers were in the market and the market was really strong. Market was really strong. So when the sellers set in, the market reversed and it descended. So this is a very similar scenario of what a bearish engulfing bar is. Okay, buyers will have control of the market, and when a seller sets in, a market reverses. So let's look at the next one. We have the bullish engulfing bar. So the bullish engulfing bar is the opposite of the bearish engulfing bar. So when you hear the bullish, you know that the buyers have taken control of the over the market. So you have the smaller body of the seller here, and the buyers come in to take full control of the market. So you realize that the market reversed at this point. So let's look at a similar situation. Good. So we have we have the sellers taking control of the market all the way down here. Then the bullish engulfing bar set in. That is where the buyers came in. So you could see that this is a support line. In our next video session, we will teach about the support and resistance. So you can see that this was about support line, and that is the bearish engulfing bar over here. When it sets in, sorry, the bullish engulfing bar, haha, that was a slip of tongue. So when it sets in, the market went all the way up here. So you can realize that you could make, if this were to be on the 1 hour charts, you could have made more than 100 pips. So let's move on to the next. So we talk about the doji candlestick. So the doji candlestick is also a Japanese candlestick. And it tells us that the market opens and closes at the same position. At the same position. So if you look at the diagram, you can realize that we have the closing price and the opening price at the same time. Okay, and shows that whatever the buyers are doing is the same as what the sellers are doing. So there's equality over here. No one is in control of the market. So with this also, it could tell where the market would move next. Okay, so assuming we have a bearish pattern, or let's say a bearish direction, and the doji candlestick sets in, it could reverse the whole pattern to become a bullish pattern, or it could reverse towards the bullish direction. So a similar scenarios here. You see, when this pattern occurs, as I said earlier, it could indicate that the market is likely to reverse. So if you could have the buyers taking control over the market and the doji's candlestick sets in, currently it may be able to reverse the market downwards. Okay, so the buyers and the sellers are equal in the market. So when a doji sets in, it could tell that a reversal entry is about to take place. So that is what you have over here. So bias all the way up, doji candle sets in, and market reverses downwards, making it bearish. Okay, so we have the dragonfly doji. Okay, we have the dragonfly doji, and this also has the closing price and opening price as compared to the previous one, which is the doji candlestick here. So with the dragonfly doji, okay, it has a long shadow beneath over here, and the closing price and the opening price is stuck at the top, so which is also equal, and at times it varies. So let's look at this scenario. The market comes down, comment. Okay, so let's say we have okay a similar scenario of what a doji is over here. So you can realize that there was a bias to control over here. You can realize that a bias to control over here, and when the doji candlestick sets in, then the market became bearish. We came down over here. So you can see there's a similar scenario over here. Now, we're looking at the dragonfly doji in this aspect, which is here. This is the dragonfly doji. So you could know that when the dragonfly doji sets in, it's talking about the bullish pattern. Okay, the uh dragon doji is also known as the bullish candlestick, as you have over here. Yeah, can you see it over here, the bullish candlestick? So when this sets in down here, we expect that the market is supposed to rise upwards. In other words, the buyers have taken control over the market. So uh it could also take time, because if you look at this scenario over here, there was supports working down here, and the buyers took over our next candle, which is the white candle, and went all the way up over here. Went all the way up. So this is also known as the dragonfly doji. So take a look at how the dragonfly doji is and master it very properly. Then the opposite of the dragonfly doji will be the gravestone doji, or the bearish candlestick, which shows that the sellers have taken over the market. So you could see that there was a long tail over here before the closing price and the opening price took place. So this is just the opposite of the dragonfly doji. Okay. Now we could also see a similar scenario here. You realize that market came from the buys, okay, all the way up over here, all the way up. Sorry, let me draw it well so that to be very clear. I'm drawing well so that it's very clear. Okay, so back to what we're saying. You realize that the market was bullish, okay, in the sense that the buyers took control all the way up here and close, and the sellers also took place over here and came all the way down, came all the way down. So you can realize that when the gravestone doji sets in, or in other words, the bearish candle sets in, sellers will take over the market. So you can realize that there was a resistance over here. There was a resistance over here. It didn't want the buyers to take full control of the market. Then let's move on to the next candle. Oh, okay. So we have a coffee break whereby you could sit down and take a little bit coffee and refresh your mind. So this was just some few basics about the candlesticks. And as I said earlier, don't forget to subscribe and like this video. Okay. Now let's continue. We have the morning star. The morning star comprises of three candles. Okay, comprises of three candles, and the morning star is also considered as a bullish reversal pattern. Okay, and it usually occurs at the uh downtrend, the bottom of the downtrend. So we could talk about the last short candle which will take place. So in this scenario, we have a bearish candle. In this scenario, we have a bearish candle, and we have a long bearish candle over here, and we have a short bearish candle here. Then the buyers set in over here to have a long bullish candle. I hope you get this one to clear. Good. And a similar scenario is over here on AUDCHF, which is a Australian dollar with a Swiss franc. You can realize that with a morning star pattern, it's also a reversal entry, whereby if we are in a bearish form, we're supposed to experience a bullish form. So market came all the way down. Market came all the way down here. And a small bullish candle sets in over here. It could also be a small bearish candle. It depends. That when there's a long bullish candle taking place, then you realize that you expect the market to go all the way up. So take note that the morning star comprised of three candles: a long bearish candle with either a short bullish or bearish candle. Then you expect a long bullish candle again, just the opposite. So you could look at the other one, which is the evening star. So with the evening star, we have a long bullish candle here. Then we have a short bearish candle before we have a long bearish candle. So it's just the opposite of the morning star. So let's look at this scenario. You can look at market came all the way up here, and when it touched the resistance, it had to reverse. So this is just a reversal entry in forex. So you can know that we have three candles also here. We have a long buy candle, we have a short, it could be a short bearish or bullish candle, and you should expect a long bearish candle. Then you know that the market has changed direction. So over here you could make about 100 pips, 100 to 150 pips. Let's move on to the next. We have the hammer or the pin bar. Okay, so the hammer and the pin bar is just like the dragonfly, just that um the bar is lengthy than that of the dragonfly. So it's also characterized by this long shadow that indicates the bullish rejection from buyers and the intention to push the market higher. So if we have the opening price and the closing price, and with little or no upper shadow, okay, but with below we have a long lower shadow. So let's look at this scenario. This hammer or pin bar is also a bullish trend. Okay, it shows that the market is going to be in a bullish form. Okay, so we could see that the market came all the way down here. The market came all the way down, and when the hammer sets in, the market started to rise. So it's just also a very nice, good entry that you could make a lot of money from. So let's move on to the next one. We have the shooting star, which is the opposite of the hammer, and the same or similar as to the gravestone doji. Okay, because the shooting formation is formed when the open low and close are roughly the same price. Then this candle is characterized by a small body and a long upper shadow. It is the bearish version of the hammer. It is the bearish version of the hammer. So with a shooting star, just the opposite of the hammer pin. So you can see that there's a very nice scenario over here. The market was bullish, but when the shooting star sets in or the bearish pin bar, the market reversed. So you could also make a lot of pips over here. So thank you guys very much for this session. As I said earlier on, you could contact us for help. We'll always be available to help you. And also we have VIP signals whereby you could we give our signals through WhatsApp broadcasts at a very, very affordable fee. And take note that all our signals are on point and our losses are so minimal. So thank you guys very much. Enjoy this video. Thank you.